Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. Our final guest on the Best of Biotech show is Karen Andersen. She's a CFA, a healthcare strategist for Morningstar. Karen, how you doing this morning?
I'm good. How are you doing?
We're doing good. So how did you get interested, or how did you end up covering this crazy sector?
Well, yeah, my background, undergrad, I was a biochem major. Really enjoyed the science, kind of learning about all the innovations coming out of the field, but wasn't really such a big fan of working behind the bench in a lab. Ended up finding out about equity research, going to business school, and finding kind of an interesting way of combining business but keeping in touch with all the science.
So just from the nuts and bolts of it, and then you also have the business background. Well, you have a big responsibility working for a highly respected rating agency like Morningstar, covering the healthcare sector or the biotech sector. And boy, what a tremendous run over the last 2, 3, 4, 5 years, however far you want to go back. And as of late, some of the biotechs have exhibited some weakness after really some good news too. Is it possible that we kind of just like found a short-term top, or perhaps the bubble may be bursting in the biotech market?
Yeah, so looking at valuation, first of all, Morningstar, we do have more of a long-term focus, and we're really looking at what we think is the intrinsic value of these companies based on a discounted cash flow. So if you look across the board at the biotechs we cover, looking at valuations on the whole, biotech looks fairly valued to us right now. It kind of depends a little bit on market cap, though. So on the whole, I'd say the small caps tend to look more overvalued. I think investors at this point are probably assigning either higher probabilities of approval to pipelines or, assuming acquisitions. Large caps, there are still, I think, a few opportunities there. So a couple of our favorite names are Amgen and Gilead right now.
Okay, let's start with Amgen. It's a volatile stock, but not as volatile as some of the other ones. Are you going based on what they're producing, or do they have some things in the pipeline that may add to future growth for the company?
Yeah. Amgen's a name that I think it's been kind of separated from a lot of the other large cap names. It hasn't been growing quite as fast. It's got some older drugs that are seeing biosimilar competition. But I think its pipeline at this point is really starting to turn around. They've got several programs, several drugs that are just gotten approval, and one big one potentially getting approval this summer, PCSK9 antibody for cholesterol lowering. I think that market's going to be at least a $10 billion market, and Amgen's got, probably close to $4 billion of that coming its way.
You think so? When you look at that, you look at something like Lipitor. When you look at a company like Pfizer, I know that's more of a pharmaceutical than really a biotech. Do you think that that's something that could hurt Pfizer in the long run?
I think that this market, the PCSK9 market's interesting. It's not really going to be going after everyone who's taking statins, so it's not going to be treating tens of millions of patients. But it's really going to be looking at those patients who aren't well served on statins, or just for whatever reason can't tolerate them, or people who have really genetic problems that give them extremely high cholesterol. So I think it's a slightly different market, but I still think it's a big enough opportunity that even if there is pricing pressure, even if that dynamic starts to get more competitive, I think it's still going to be one of Amgen's biggest pipeline products.
Okay. When you talk about biotechs, and maybe if you talk to the average person on the street or average investor, they'll probably mention Gilead Sciences, and the stock lost a patent, I believe, not a patent, but exclusivity to Express Scripts. Really bound back on that. It's kind of been in a trading range for quite some time here. Could you give us your evaluation of Gilead Sciences?
Yeah, so Gilead, it's been a very transitional time for them. 2014 was just explosive growth with launching their new hepatitis C drugs. I think that took we were very bullish on the market, but even for us, it really took us by surprise how quickly Sovaldi and now Harvoni are being taken up by the market, especially in the U.S. I think right now people are starting to wonder how much growth is left, how much more rapidly can they grow off this base, and what's the competitive landscape like. We've got, you mentioned exclusivity, so AbbVie is the company that's now competing with them. For the most part, I think Gilead's doing a great job at hanging on to access to patients, hanging on to very favorable positions on these drug formularies that payers have. And I think, yes, they are discounting, but I think it's also opening up for them a much bigger market of patients who now have coverage. There's no hurdles kind of standing in their way, between them getting a prescription and actually getting treatment. So, we're bullish on, really seeing a strong improvement in the number of patients being treated, and I think that's going to feed down to growth this year as well.
And some of these drugs are pretty darn expensive. I mean, you think that that's, where people are coming in, they're undercutting them, and then, obviously they're going for the lower price. You think that, do they have any other drugs that might be susceptible to that kind of competition?
Yeah, I mean, I think Hep C certainly. There's a couple other players like Merck and Bristol that are going to try to come in, and then a few other markets where we've got. Yes, it's some innovations coming forward, but there are several companies that are innovating. So, I mentioned PCSK9. There are really only two main companies there, but I don't think in terms of companies kind of pitting companies against each other and getting them to really ratchet down those prices. And that's not really a game that a lot of companies like to play, especially if it's a really long-term, strong opportunity like the cholesterol market. That's a market of chronic treatment. Hep C is a little different. You've got kind of this pool of patients who have Hep C. Not as many people actually getting the disease today. So I think there's kind of an urgency from AbbVie to get into that market and get into it quickly.
Bristol Myers came out with some positive news here. I believe they stopped Checkmate 057 early from good results here. Boy, when you see a $3.50 pop in a stock like that, I mean, is that a little bit too much too fast? Is Bristol Myers something you cover?
Yeah, Bristol's actually on our big pharma list, but yeah, I mean it's certainly been, if you look at the way it's trading and kind of the growth rates of that company, it's looking much more like a biotech these days. And it's also the company that's really got the lead in this immuno-oncology market, so kind of a whole new class of cancer therapies. And that's a market that, I have to say, we think that the market is actually, at this point, still underestimating the opportunity. We think that's going to be, for the classes of drugs that have been approved alone, we think that could be a $33 billion market by 2022. And I think there are going to be new drugs that could combine with these drugs that will make that, approaching maybe a $40 billion opportunity. So Bristol's leading the way there. Merck's also in the running, and Roche. But yeah, I mean, I think, it's kind of tough to draw the line between biotechs and pharma in some cases.
Yeah, definitely as of late. We were discussing with one of our guests earlier, obesity cause a lot of health problems in the United States, a lot of money being spent on that. Is there any leaders in that sector? I mean, obviously, stocks like Weight Watchers and Nutrisystems have just been annihilated. You have Apple coming out with the watch. It's supposed to have some kind of positive effects for health or for obesity. What's your take? Any diamonds in the rough here to treat obesity?
Well, I mean, I think that the one company I cover that's just recently got approval for an obesity drug is Novo Nordisk. I think the one thing they've got going for them, it is an injectable therapy, but it's just a higher dose version of something that's already been on the market for several years, a very popular and increasingly popular diabetes therapy. So I mean, I think they've got a really excellent track record for safety. And it's a company that's been, we think at this point the company looks a little pricey, but it's one that definitely has an outstanding track record for innovation and bringing new therapies to market. And obesity is a new field for them, but they're really, the leaders in diabetes. So it's a natural fit for them.
Okay, moving on to one of the big dogs in the sector, Biogen. Uh, what a case of sell the news here. I don't know how closely you're watching these issues on a day-to-day basis, but boy, you had that gap and go, and that just put a top in the stock, and it's come back and recovered. I mean, from a technical, if you like to look at charts like I do, I mean, it has a major support level here, just in the lower 400s. I mean, it's rebounded, but man, it's just kind of a lazy rebound here. If you compare it to the IBB here, it's just going to take a little time for this stock to get back up to new all-time highs.
Yeah, Biogen's in the, we think at this point does look fairly valued. I think that there's been, the huge run in this name, over the past couple of years has been, really as people get comfortable with their opportunity in MS. I mean, they've got a multi-billion-dollar franchise with a great pill called Texidera. But then also their pipeline. I mean, it's, the news has been about kind of the mid-stage pipeline that, we were a little skeptical about a few years ago. They got some really high-risk programs, but the Alzheimer's data, that's been kind of the, front and center for Biogen these days. And that's, so far that looks good. I think it's going to be tricky to find the right dose there, and make sure they're, this whole theory of targeting amyloid, I don't know if it's the best target, but it looks like it's doing something for patients. So that's clearly, that's a market, we think that market could be a $20 billion market within the next 10 years too. So
Okay.
they've got some great programs going.
Another stock that you cover, Mankind here. Our last guest wasn't a huge fan of it. Just seems like every time it gets a pop off some good news, it just kind of comes right back down here. Trading at just above the $5 level here. Any takes on Mankind, MNKD?
Yeah, I mean that's one that's definitely been really volatile. And I think that investors have been a little surprised that it hasn't done as well, especially now that it has that partnership with Sanofi. That seems to give it a lot more credibility, I guess, for taking out a claim in the diabetes market. We still think that this is more than $1 billion opportunity for them with Afrezza. I mean, I think it is kind of a niche therapy, though. I mean, the inhaled insulin has still got some. There's still a lot of work to do, I think, with marketing and with convincing doctors that this is a safe therapy and it's a good option. But there are definitely patients out there who just aren't good candidates for injecting insulin. And I think that Sanofi really needs to get some growth in its diabetes market, and this could be kind of a premium priced niche therapy for them.
Okay, another one of the bigger stocks, CELG Corporation here. That kind of peaked at a similar time that the Biogen did. Now coming back, finding a real nice support level, but kind of like Biogen, really not getting out of the doghouse here. Is this one very valued to you?
Yeah, so Celgene actually looks, I'd have to say it looks slightly overvalued. Celgene's a name that I think if you're looking at the near term, we're extremely bullish on. They've got a great cancer drug that looks like it's going to be, growing double digits for the next several years. But a couple things that make us a little bit more hesitant in terms of, getting to, price levels today. I mean, one is I think the patent issues surrounding that drug. It's 2/3 of the company, and it's going to be more than half of sales for at least for the next 10 years, we think. But there's still some doubts about really how long they're going to have patent protection there. And then the other is, they're really building. They've got dozens of partnerships at this point, preclinical partnerships. Those are. I think the market is starting to assign more value to those, maybe just implicitly, but I think that I think it's still too early to really, to build in specific dollar amounts for programs where we haven't seen any clinical data.
Okay, all right. Well, we're just taking a look at the IBB here, and once again, that has recovered a lot better than some of these individual stocks here. Do you pay attention to the charts at all, or any technical levels, or are you just trying to dig into the individual stocks and find the value in them?
Yeah, Morningstar is much more about the intrinsic value, looking more long-term focus, looking at cash flows coming out of these companies, looking at competitive advantages. So we have a term called a moat. So if a company has a wide moat, we think they have very long-term competitive advantages and the ability to generate strong returns for many years.
Okay, we've been on the line with Karen Andersen. She's a CFA, healthcare strategist for Morningstar, giving us her outlook on the biotech market. Really appreciate it, Karen. We hope to have you back on again soon.
Thanks. Sounds good.